thinking about tech companies, but usually it's run by younger people and can't imagine who would want to sell. Any ideas on how to shortlist tech companies to find motivated sellers? Yeah, it's a good question, and you're right. Most I don't want to say all, it depends on the company, but I agree. Most tech companies are going to be owned by young entrepreneurs who want to build the next Uber or next Airbnb, kind of, right? Um, so I would say skip those deals as soon as you can. Like those who think they're going to build the next Uber or Airbnb, those are not the deals for you as a first deal, especially if they grow as fast as kind of like a VC backed company, because you're usually going to deal with crazy multiples. I'm talking like 10x on revenues and not 2x on EBITDA, right? So that's something to be aware of. Um, I did see, we actually have a guy in the program, I forgot the name, Aram, who bought a SaaS company at like 3 times multiples of pre-tax profit, which is insane for a SaaS company that have a lot of recurring revenue. But the owner of that business, there were 2 brothers from what I remember, and they were just looking to retire. So there were 2 brothers who owned the business, similar to what James mentioned, for like, I don't know, like 10, 15 years. And they had a very unique SaaS business working with like local shops, kind of like a point of sale type SaaS company. So you can find some of those unicorns, I'd say, but yeah, you need to be careful not to waste time on those who look for growth capital to grow their startup, because that's not, unless you have some money to play with and you just want to throw money on random businesses, it's not what you want to do, right? You want to quickly filter and see if they actually have motivation to sell. And you ask how to shortlist tech companies motivated to sell. Unfortunately, to really know if they're motivated to sell, you need to talk to them, right? And really understand kind of like what they want to do, why they even talk to you. And you just need to ask questions and build rapport. And in the end of the day, the only real way to know if they're motivated to sell or not is to make an offer, right? And until you make an offer, it's all just people talk. So it's about finding a fine balance between building rapport and getting to know them and not wasting too much of your time, because that's something you need to be careful as well. You don't want to waste like hours of your time with someone who is growing. Some of those tech companies that are being backed by VCs are growing 10-20% month by month. And if they'll sell the business to you, they'll only sell the business at like 10-20 times multiples of revenues. So again, unless you have money to play with and you just want to back potentially the next Uber or something like that, I would say, skip those. Like, if it's your first deal, like, make it easy for you, make it simple for you. Go for business that you can buy for 2 times. Like James just mentioned, 2 times EBITDA, 3 times EBITDA. It's going to make your life so much easier. It's also going to be so much easier to finance. It's also going to be so much easier to then just own the business without much dilution if you bring in equity investors, or without too much debt to deal with. So that's something to definitely keep in mind. So I hope that answers that. But yeah, I think a big thing, especially if you guys all getting started, is be careful from business owners who talk to you because they look at you as someone who can potentially bring them their dream exit number. Everyone can like have their number. I wish they'll pay me X amount of dollars for my business because it's going to basically allow me to retire. So be careful from those people who just will talk to any buyer just for the sake of potentially figuring out if they can get their number. And be careful. Be careful in a good way. Just don't waste too much of your time. Like for those companies who grow super fast and are always looking for growth capital, like those are not the type of deals that kind of like we're focused on here in the program, right? We're focused on business that exist for sometimes 5, 10, 20 years, are growing very steadily, or sometimes even slowly going down because the owner is not as excited to work in the business. And those deals you can get for like a fair multiple, fair accounting valuation, and can usually finance because there's just a lot of record for cash flow in the banks and investors, and anyone can just be more comfortable financing it. So I hope that answer your question, Ahmed. But basically, yeah, be careful with, like, tech is brutal, man, and I'm telling that as someone who's very familiar with that space. It's a brutal space of especially I'm talking about like the new tech companies, of people who want to grow the next unicorn. They're always look to raise more capital. A lot of them are not even profitable. Like if you look at a lot of the tech companies who go public, they're not profitable, right? But they can raise more and more capital, and that allows them to grow and make a lot of money for their investors and entrepreneurs potentially. But for you, as kind of like your first deal, yeah, I don't know if that's the word to play with, especially as a buyer, as an investor, however you want to look at yourself.